Today, I'm going to talk about precious metals, including gold and silver.
Precious metals taking a break. There has been a mystery gold buyer. Someone made a massive bet in the options market that gold will rise above 4,000 in 18 months, take a 30% move just to get it back to its old high of 1927. Trade war continues. We may get that, the 1927 price. Gold breaks all support on global risk on. Risk on means sell gold. Backing the recession out of the picture also dumps flight to safety trades. We think gold has a future, just not yet. Wait for a bigger dip to buy precious metals. And I have a question from Doris on gold, and it says gold had a nice day on Monday. Since the start of reversal from the selling pressure, answer no. As long as the market's pushing the new highs, which it seems to be doing today, you don't want to be anywhere near gold. Wait for a better opening lower down. Okay. And are you sending trade alerts? Here's a question. Are you sending trade alerts out on the biotech letter? And the answer is not in the form that we see in Global Trading Dispatch or the technology letter. Essentially, everything we've put out so far has been a long-term buy. That's been about 20 different companies. All of them have gone straight up. So that's really more of a long-term buy and hold situation. Since we're in the very early days of the boom in biotech and healthcare stocks, you don't want to leave money on the table with short-term trading trade alerts, where most stocks in the main market are already at all-time highs. Gold, yeah, utterly, slight downtrend. When you get a modest downtrend like this, it means that's only temporary. We're going to come back. We don't know when. In the meantime, look for major support at the 200-day moving average at 132. GDX, same kind of weakness. Barrick Gold, and you saw you got that one-day pop on the sell-off yesterday. It's since given it up. And that's what you really need to get the gold sector going, is a weak stock market. And I'm not willing to make that bet yet. Newmont Mining, also, this seems to be the better of the two companies. Notice that this has gone down less and popped back faster. Classic sign of a stronger stock. If you are inclined to play gold from the long side, you want to be buying Newmont Mining first. Silver, also going nowhere. Silver miners, same deal. Wheaton Precious Metals, also, these are all a bull market for precious metal plays, which we're ignoring for the time being. So just keep them on your radar and watch them. Copper took a 5% hit off the recent weakness. I'd probably be looking to use this dip to buy. Freeport McMoran also need a little bit more of a sell-off to get me involved, although you might consider something like a $9, $10 call spread on this going forward. Another question here. Fidelity just said that 50% of baby boomers who manage their own portfolio should rebalance it. What do you think is the best way to optimize my portfolio as the baby boomer born in 1954? Well, you should always rebalance every year, especially when you get gigantic moves in single sectors. The interesting thing here is this is a year when everything went up, so you may not need to rebalance that much. When I say rebalance, I'm talking about rebalancing your weightings of stocks versus bonds. If you're older, you want to have roughly a 50-50 ratio on those. So that would suggest paring back some of your equity weighting, increasing your bond weighting to reflect the greater improvement by the stock market. Another question here, marijuana stock Tilray has just had a pitiful year, going from $100 to $20. and missed earnings targets in 4 straight quarters. Could this go to zero? Answer, yes. After all, how hard is it to grow a weed? I mean, I never bought the story on the whole marijuana sector, not only because, they're not allowed to participate in the financial sector. It's an all cash business. You hear about people moving around with suitcases full of $100 bills doing trades in Oakland and in Denver. But the other thing is just anybody can do this. I mean, and also they're getting still a lot of competition from the black market, the old black market where everybody used to buy their marijuana because it's tax free. And there's about roughly a 40% price difference between the tax-paying legal form of marijuana and the old tax-free black market where you used to get where some people got their marijuana, not me. I don't have time for marijuana, unfortunately. I only have time for Cabernet and Merlot. But yeah, I want to stay away from marijuana. It's no great value added there. It's not like they're designing 97 stacks semiconductors.
I hope all of you found this helpful, and hopefully it has also improved your trading. This is John Thomas, the Matt Hedge Fund Trader, signing off for today. Good luck and good trading.